Well, the RSI on the weekly chart of TQQQ just hit 70 today. Does that mean that the ship is about to sink, or is there something you can do about it? Find out today on Mastering TQQQ Trading. Good morning. Ethan Roberts here with another video on Mastering TQQQ Trading. Well, you know, the weekly 14-period RSI just hit 70 this morning. Now, that's the relative strength index, and it's a technical indicator used in the analysis of financial markets, and it's intended to chart the current and historical strength or weakness of a stock or market based on the closing prices of a recent trading period. Now, RSI overbought level is anything above 70, and the oversold level is anything below 30. So hitting 70 today, we are now officially in overbought territory on the weekly chart. Now, a daily reading with the 14-period RSI would be less powerful, and it changes a lot slower. So the weekly is much more significant when we see the 14-period move into the overbought area. For trading, we often use the 2-period RSI for overbought or oversold readings. Some traders use the 3-period RSI rather than the 2-period. It's just personal choice. I prefer the 2 myself. So I want you to remember that when the RSI is overbought, it does not mean that the move is done. It simply means that the risk of decline becomes greater than the opportunity for further price advancement. In other words, the risk-reward ratio is now going to be skewed further towards risk than reward. So that can be a problem if you're holding a long position. There's often a lag of a few days to a week or more between the high that's reached by the RSI and the high price of the TQQQ. We're going to see that in a moment on our chart. Therefore, we don't want to panic sell if and when the RSI climbs over 70 like it did today, but we're going to begin to tighten up our stop loss orders and become more vigilant. Now here we have the weekly chart of TQQQ going back a couple of years, and I want you to notice on the right hand side I've circled the RSI, which is now hitting 70. Now, there's been several times before when that's happened, and we're going to take a look at what TQQQ did over the following couple of weeks or months. So take a look at this chart here. We're going back 4 years to November of 2021, and you can see that the RSI levels at all these different high peaks were all in the mid-70s. Okay, so like in 2021, when the RSI hit 74 and change, we had a high of 87.85, and at that point it started a decline that took it all the way down to $15.64, a loss of 82%. Now that's the biggest loss that we've seen in the last couple of years, and maybe we're not likely to have that much of a loss, but we have had other losses of 35, 23, and 42% at other times when the RSI went into the mid-70s. So now it's October of 2025. The RSI level, we hit a high today of 70.27. As I'm recording this, we're back at about 70 because the TQQQ has come off its highs for the day. But what are we going to see going ahead? That's the story, and we have to figure out what we're going to do about that. One thing to keep in mind is that if we get a 10% correction in the QQQ, that means that TQQQ is going to decline roughly about 30%. So it's a much more volatile ETF, and we really have to be vigilant and watch it and be careful in our trading. Now, if you're only day trading or maybe swing trading over a 2-day period, there's not much to worry about. But if you're holding long and you intend to continue holding long TQQQ, you really need to stop and think about what you want to do at this point. One thing that you can do is to consider selling weekly or monthly covered calls on your long positions if you do not want to sell those positions. It's not going to protect you from a big downturn, but at least it's going to reduce any losses that you have with the cash premiums that it pays out, and those premiums are very rich. Another alternative is to buy out of the money 1-month puts as a hedge against the downturn. So if TQQQ drops, the value of the puts will rise to offset your loss. Of course, if TQQQ continues going higher, those puts will go to zero. But I want you to think of it like insurance. It's just a hedge. Another alternative is to buy SQQQQ, which is the opposite of TQQQ, and this one will rise by a measure of 3 when QQQ declines. I'm not a big advocate of SQQQ, but there are some times where you might consider getting into it, and this would be one of them. Now, if your TQQQ position is in an IRA, you should consider selling your shares and then selling puts at an out-of-the-money strike. If TQQQ continues to rise or trades flat at this point, you're still going to derive premium income similar or perhaps better than what you would have earned from the shares appreciating. And if at option expiration TQQQ is above your strike price, you have no obligation to buy the shares. Should it decline below your strike price, of course you'll be assigned the shares at the strike price, but that's going to be a much lower price than where you would have sold it. So here's an example. Before today started, TQQQ was at $107.04. And so I checked out what the out-of-the-money put premiums in a month from now would be paying. The 100 strike, the bid to ask is $4.10 to $4.25. The 95 strike, we see a bid ask of $2.92 to $3.20, and the 90 strike, we see a bid ask of $2.09 to $2.20. So if we were to sell TQQQ, say at $107, and then we immediately sold a $100 strike put, it would be similar to TQQQ, going up to $11.10 or $11.25. That would be the bid and the ask by November 7th. In other words, we're gaining $4 and change on the premium, and so it's the equivalent of TQQQ at 107 going up to 111 and change. Now, if the TQQQ falls below $100, your break-even point would then be 100 minus the $4 and wherever you got in, whatever price. So it'd be somewhere between $96.90 and $96.75. Now, if you sell the 95 or the 90 strike, that's going to protect you even further from a loss, because it means that TQQQ would have to fall much further before you would be assigned the shares. But it's going to pay you less of a premium. And then, of course, there are strike prices between $90 and $100 in dollar increments. So you don't have to just do 100, 95, or 90. You could do a 91, a 93, 94, 97, whatever your particular choice will be. Now, the point of this video is not to advise anyone on what they should or should not do. I am simply presenting a historical look at how TQQQ has performed when the 14-period RSI has moved above 70, and providing traders with some various options of different strategies that they can employ at this point. If you're holding TQQQ long term, you can also do absolutely nothing. Okay, that you can just sit there and continue to let it ride. Take your chances with a correction. Perhaps there won't be one. I think there's going to be in the near future, but perhaps there won't be one. And you should know that over the past 15 years, TQQQ has risen to new heights every single time that we've had a severe correction. And I'm going to show you what that looks like on this chart. This is the 15-year monthly chart of TQQQ, and you can see that at every point where it came down, that's gone back up. Even when we had this severe decline this year going into April, we have come back very strongly since then. So if you decide to ride it out, know that over time you're probably going to go higher. But for those who like to trade in and out of TQQQ, now would be a pretty good time to start being more vigilant, put those stop loss orders in, and start to think about what you might want to do once we get a little bit above 70, like we saw in the charts that I showed you before. Well, if you like this video, please smash the like button and subscribe to my channel so you'll be notified whenever I post a new video. In addition, I've created and run a Facebook group called Trading TQQQ, and I teach an extensive 8-hour course which lasts for 4 weeks called Mastering TQQ Trading. You can view the course outline and sign up for the course below. And that's all for today. Hope to see you soon.